Welcome to FXStreet Currency in Play. It gives me great pleasure as always to introduce Mr. Eddie Tofpik, Head of FX at ADMISI. Morning to you, Eddie.
Good morning to you.
Just as well, I haven't got my false teeth in. Right, let's top trends this morning. The euro against the US dollar. Euro flattish around weekly highs as Catalan independence push eases ahead of Draghi's speech, which is today.
Yeah.
In terms of dollar yen, slides to a fresh session low near the 112.25 level. And finally, my favourite, cable, sterling flat ahead of Brexit talk.
Yeah.
Now, we talked off air. There was another something you wanted to mention.
There's a bit of an interesting talk going on between the Chinese and South Koreans. Now, China and South Korea have a mutual swap line to try and internationalise their renminbi more. There's talk that this may have actually extension, which has been 2 extensions in the past, may not necessarily be going forward, and it's for political reasons rather than for economic. The reason is because they've deployed those missiles in South Korea, the defensive missiles, THAAD I think they're called, and that seems to have upset the Chinese enough that they've actually taken an economic sort of thought, but it's not necessarily been proven yet, but there's a little bit of a talk about that. Plus obviously the El Clasico between the Catalans and the Spanish.
Yeah, understood. Okay, well, let's have a look at some charts you sent over. The euro against the US dollar. Am I buying this or selling this?
Well, at the moment, it's a really interesting position because, as you can see on there, you've had a small head and shoulders.
Which is bearish, right?
Which is bearish. We've had the pullback down and the resurgence back up to the neckline, which is exactly the way it should be. It's what happens now. The target for the drop down is that X that I've marked there. Now that's just below significant support around 1605, 1614, plus the medium moving average was 1623. It's actually around about 1590, so it's about 20 points underneath that. But this is a key point. If it's to happen, we need to turn over at this level and come back down, and this then leads to the bigger head and shoulders top, which if you look from August right through to where we are now, we've got this the shoulder over August, the crowned head with a head and shoulders top there in September, and now we're forming the second shoulder. So it may not happen straight away in one day, but it could be that it happens over the next few days. 2 consecutive closes over that neckline, it puts it in doubt. We may then have another try on the upside, but it should be sort of like an easing pattern starting to sort of tip over at some point if this pattern is to happen and go on. But then underneath the mark, you've got a load of support between 1510 and 1466.
So an absolute critical chart point on the euro dollar. Yeah. Let's have a look at euro Great British pound. Is it time for Moose to go on holiday?
Again, well, it's an interesting time. You've got 90.25 is 50% move of the drop down we saw in September. Okay. And we're coming up close to that. Yeah. And we're starting to see we're running into that resistance ahead of it, which is just ahead of 90 even. We've got the medium moving average of support underneath at 89.20, which is that purpley looking line. And then the long moving average, which is way underneath the market at 87.40, is supporting it. Everything at the moment still looks bullish. All the moving averages are either flatlining or going up. So therefore the trend is still seen as being positive. Or bullish in this particular sense. It's starting to come to its first real resistance if this move continues. It wouldn't be surprising me if you see over 90.25 you see some stop levels, especially over say 90.50, because we had that previous high in mid-September when it dropped down. So I think you're going to see some resistance ahead of it with stops above it. If it drops down, well, it's still bullish all the way down. It'll be going to neutral if it goes below 89.20, and it won't go bearish until it goes below 87.40.
Okay, so really another key area.
It's the euro working its way through in both those items.
Okay, that's interesting. Let's move on now to a favourite of mine, the Great British pound against the US dollar, highlighting the FT, institutional managers saying it's too difficult to trade. No, are the charts working there?
Yes, it is, because you had that Andrews pitch, that 3 times at pointing upwards. And I said that's where likely we're going to see the move down to, and we did, and we exceeded it. And I thought, oh, hello, maybe this is broken now. But all it did was go down to the medium moving average, which is that purpley line there, which was at 130.26 at the moment. It bounced through there. We only had one close below that.
And snap straight back up.
And snap straight, just the one. just the one. And then we've gone straight back up again. Now, what's interestingly, the key Fibonacci level for the whole of the 2016 move is 132.33. We're above that for the first time today. We're above the move down 50%, sorry, the big move up 50%, which is at 132.14. We're above that. We've had one close already above that. So it's an interesting move for a potential to try a little bit higher. I think this is being dragged kicking and screaming with the euro.
Yep.
Rather than sort of like on its own necessarily. But what's really good is the fact it went below that time and then bang, straight back up again.
Do you think Mr. Carney will hike up rates in November, yes or no?
I haven't got a clue.
That's
Don't
the right
care.
answer.
It's all up there,
It's
mate.
all in the charts. Okay,
Yeah.
so let's move on to the South African rand. We haven't looked at this for a very long time.
Exactly. This is a pretty clean chart in relative terms. There's a lot of political stuff going on there because of the potential for President Zuma to be replaced at some point, and who's going to go in, who's throwing their hats in the ring and stuff like that. What's interestingly is we had this big spike on Monday up to the top. Not very big, but enough. But the whole action of this week means if we carry on, or even if we manage to close below that 50% fib at 1347.60, that'd be brilliant. But if we close even at these levels, on a weekly chart we have a key reversal down, which means the likelihood is that we're going to go back down to the 1320s, which is the long moving average, and then down maybe possibly the 1315, which is where the medium moving average is. And those two areas of support. The market is bullish at the moment, but it's that key reversal. There's an opportunity there that's building right now, right this week. That could then potentially move. And there's a lot of people, I'm not the only one who said this, that was a key close yesterday, that we closed down below the previous week's action. But we need to close the whole week. I'm always conservative, so the whole week. But this is something to really, really watch. There's some good opportunities in this one, I think.
Understood. Let's go on to Bitcoin, the daily chart. Technicals working here?
Yes, because last time when I was here last week, I said this thing is gradually moving higher, and it's going to test the high. And between the time I printed and sent this to you, which was about an hour ago, to where we are when I left, it had already punched through that previous high of 49.80 and is trading somewhere around the 5200 level. It's up to the next box, effectively above it.
Right.
And that's happened within an hour.
Wow.
And I've said all along, this was a new positive bullish move. The big pull down, that cleaned out a lot of stale longs. A lot of the ICO people and people who are in that sort of thing, they got out of it. But then we had two indecisive actions for any further move down. So now we've turned around, we've had nice easy ranges of gradually building support, taking ammunition for new moves higher, gradual pullback, ascend, 3 steps up, 1 step down, 3 steps up, 2 steps, but always gradually move up. And then today we've punched through the high. We're a new all-time high.
Upside target?
Well, you've got to be looking somewhere at 59.83, which is the projected fib at 50% at 59.83, if that's the case. But it's enough to maybe go up to 5,300 today, which is the middle time of that Andrews pitchfork.
Yeah.
Really, then you've got 57.46 after that.
Well,
And that's why it's good to chart. That's why it's a brilliant market to look at.
Again, what? Let's just suppose I was cynical for a moment. But you've got a succession of higher highs, higher lows. Okay, you don't have big ranges on this move up. Okay,
Well.
but this recent action looks like an orderly market.
It's an orderly market, yeah. Well, a lot of people got taken out of the market. The stale longs got out of the market. This is an orderly market we've had over 3 weeks. 4th week we're in now, 3.5 weeks. It's a great market.
But the price action looks very different to the headlines in the newspapers, right?
I'm sorry, I don't read those.
Okay,
I
right.
go home and I watch sort of series shows and things like that and films.
Let's wrap up with the economic calendar today. Anything there that's going to move and shake? Obviously, Mr. Draghi talking.
I don't know about you. It's thinking about Draghi. All of them are talking. I've never known a time when so many members of MPCs and central banks want to get their thoughts across. And I'm not actually sure what their thoughts are.
They need to listen.
Because you know, and they're obscure and obtuse, and I'm not exactly. Why? Why are they talking? Why are we hearing so much?
They need to listen to Mr. Eddie Tofpik.
No,
Eddie,
they
as
don't.
always,
They
thank
need
you
to
very
listen
much
to me.
indeed for your time.
Thank you very much.